We're going to preview some big economic data to come out tomorrow to finish the year. Joining me is the EY Oceania Chief Economist, Cherelle Murphy. Cherelle, great to see you. The national accounts tomorrow, what are we expecting?
It's going to be another weak one. So, we'll get a number for the quarter, which is probably around about 0.5, roughly, which would take the annual rate to 1.1. We really haven't had a number or GDP growth above 2% since about this time last year. So it's been a really weak year, considering that prior to the GFC, we had growth rates, somewhere between 2.5 and 3 quite easily. So it's going to be a weak one. Different interesting things going on underneath that headline number, though. So we will have, for example, probably quite a big increase in public spending again. Consumption might not be too bad. We might see also some business investment and dwelling investment pick up, but inventories will pull right down on the number. So there's lots sort of below the surface.
It's patchy and it's still anemic growth levels, but the retail sales were up for the month. Is that the Black Friday sales effect?
Yeah, that was for October. So there was obviously quite a bit of activity related to Black Friday, which was actually not related to Black Friday at all. It had been obviously retailers looking to pull ahead of those sales. We also saw that reflected in the consumer confidence numbers that came out this morning from ANZ and Roy Morgan. They showed that the time to buy a major household item had shot up in the last week, which is again likely reflecting of the fact that people were holding out, waiting for those sales events, and then went on and purchased. Whether or not that lasts, though, of course, is the big question, and there's certainly reason to believe that overall consumers are being a little bit cautious.
But the consumer sentiment was up given that sales event. Overall, though, there's been no dramatic shift yet.
Not yet. We're certainly seeing little snippets of improvement. We do a future consumer index where we ask consumers about how they're feeling as well and how they're looking towards the future. And it's not sort of positive, but it's less people are negative. So we are seeing, just that slight shift in sentiment, which there should be when you think about it, because we've had tax cuts, we've had lots of rebates, and we've had real wages growing again. All these things should add up to a more healthy and I guess lively consumer.
The other thing that will help consumers and many people will be a downward trajectory on interest rates.
Yes.
I saw some analysis by a few of your fellow economists this week suggesting that the unemployment rate, the view about the unemployment rate needs to be revised by the RBA, that it can be lower with rates being cut. What's your assessment of that?
Yeah, there is certainly some improvement in the labour market, which would suggest that we can keep the unemployment rate a bit lower than we're used to without triggering inflation. So that's a kind of the magic formula of, I guess, if you can kind of keep jobs growth strong, unemployment low, but at the same time not trigger inflation.
That's the soft landing, isn't it?
It is exactly the soft landing. And although to a lot of consumers it doesn't feel like we're in a good place right now, that is definitely a very positive development in the economy, and that is likely to last for some time, which is great.
And so just to wrap up before we go and as we head into Christmas and the new year, what's your assessment on when we can expect the first rate cut?
So I think that we're likely to see something towards the middle of next year. But I have to say that with the election of President Trump and a suite of policies which look to be very inflationary, particularly in the sort of 12 to 18-month horizon, the Reserve Bank may start to get a little bit worried about that. So by the time that we're ready to lower rates because domestic factors have eased, it is possible we're being hit by another sort of tranche of inflationary pressures from overseas. So we've got to watch that. But there's a lot of scenarios there, so we'll see.
Yeah, we'll see. But the next big number out tomorrow, and I appreciate you coming on to preview that with us, Cherelle. Thanks so much.